Ark Invest just published a new article about Tesla, and they say that the Cybertruck could be as mainstream as the Tesla Model Y. Wow, that's really bullish. This was a pretty interesting article, so let's dive in. Analysts, forecasting agencies, and auto manufacturers once thought electric vehicles would become little more than a niche product. Will they be wrong about the Cybertruck as well? Yes, they definitely will be wrong about the Cybertruck as well, is what I believe. In Ark's view, the low expectations for Tesla Cybertruck are based on a blind spot. Today, most automakers fund the development and sales of unprofitable EVs with profits from their gas-powered truck sales. If the Cybertruck were to disrupt that profit center, traditional automakers could end up in trouble. Not just could end up in trouble, but will end up in trouble, especially GM. Ford, though, I think they are going to survive. They are making all of the right moves, although a little bit late, but they are making the right moves. Then Ark Invest continues, in Ark's first year, 2014, the U.S. Energy Information Administration, EIA, forecasted that long-range electric vehicles would have little to no U.S. market share in 2040. Wow. Last year, the market share of U.S. EVs topped 5%, so now they must have increased their predictions by a lot, right? Like maybe they're thinking at least 50%, which is still super bearish, but maybe. I mean, there are multiple states now, multiple places in the world also, that actually are going to ban the sale of gas-powered vehicles by 2030 or 2035 and 2040. So, I mean, you would think that they would take that into consideration as well, because that's really obvious. I mean, if it's illegal to sell gas-powered vehicles, how are you going to sell them? Ark Invest continues right here. So now, having increased its forecast each year, the EIA expects U.S. EV market share to plateau at 14% in 2040. Wow, these people just don't learn. This might be a little bit inappropriate, but you tell me if I'm wrong. Maybe EIA should stand for Eroded Intellect Agency. I mean, if there was an example of the government being silly, ridiculous, and incompetent, this is a pretty good one. I mean, even when you look at legacy automakers, you look at Ford. Ford says on their own website, Ford expects 40 to 50% of its global vehicle volume to be fully electric by 2030. And even GM is planning to go all electric by 2035. So what numbers are these people looking at? Check this out. These 7 states in the US are going to ban sales of gas-powered vehicles after 2035, and probably the list is going to get bigger. I have a question for you. Do you think these states account for less than 14% of the total auto market in the US? Well, just California alone is about 13% of the whole US market. While it may look like I'm upset, in reality, I'm actually pretty happy about these predictions, because this presents a huge opportunity to us investors, because it's not just the government that thinks that the adoption rate is going to be this slow. There are still quite a few fund managers and even retail investors as well that are oblivious to facts. I also think that the EV adoption is not going to be that fast, although I think very few people would be as bad as this government agency. And they just do not understand exponential growth at all. You look at historical growth and clearly you see exponential growth, but somehow they make these linear predictions. Silly predictions. The EIA expects trucks to constitute 69% of all vehicles in the US by 2050, even though electric trucks will not gain traction beyond 10% share of the total as shown below. What does Ark Invest say? Well, they disagree. In addition to 1.5 million existing Cybertruck reservations, early Google Trends data suggest that the Cybertruck could be as mainstream as the Tesla Model Y. Now I know, looking at Google Trends, maybe not exactly the most reliable way to make predictions that actually come true, but Check out what they say later. On April 2nd, 2023, just as Elon Musk tweeted that he was walking the Cybertruck production line, the number of searches for the Cybertruck on Google exceeded those for the Model Y as shown below. Notably, Cybertruck search volume originated, and this is the important part, in truck-loving geographies, potentially suggesting desire to buy. The Cybertruck here is in red as well as here, and the more red the color is, the more searches are originating from these specific locations. I think largely it will come down to what is the price going to be for the Cybertruck. If it is going to be incredibly expensive, then sales will not be that high, but Tesla can just always make a regular truck and then sales will be high. Ark Invest continues, while sell-side analysts may be uncomfortable forecasting exponential EV growth, we believe it would be a mistake for them not to consider the implications Cybertruck's success could have for traditional automakers. Ark Invest predicts that by 2027, we might be able to see 70% EV adoption globally. I know that sounds a bit high, but it's not completely impossible. This picture has been going around on Twitter. Can Tesla experts comment on the quality of Tesla Cybertruck? Well, I certainly can, and the most important and perhaps obvious fact is this is a prototype. And let's not forget that the Model Y has now become the world's best-selling vehicle this year. So I think Tesla can have fairly good quality going forward. I don't think it's a concern. If it is a concern in the beginning, if we do have these issues, I think they will be fixed. Yesterday, Cathie Wood was on Bloomberg TV. Let's take a look at what she said.
Tell us what you're seeing with XAI or with Tesla's focus on AI. Today, Tesla getting bought because it's done a deal with Ford on its electrification and indeed the way in which you charge your cars. But what are we perhaps missing when it comes to being the #1 artificial play, as you just said?
Yeah, yes, the autonomous taxi network that we believe Tesla is building, it has more data. Talk about proprietary data. It has more data of real-world driving miles than all of the other auto companies and technology companies like Waymo put together around the world, we would say, except for perhaps China, because we don't know exactly what's going on there. And we do believe that the autonomous taxi platform opportunity is a winner-take-most opportunity. The company that gets a person in an autonomous vehicle from point A to point B as quickly and safely as possible is probably going to get the lion's share of the market. And that company will, in the United States, we believe, be Tesla. And we believe globally that opportunity will scale from zero today to $8 to $10 trillion in revenues by 2030. So you can see why we're so excited by Tesla. It is the furthest advanced from an AI point of view, and it's even becoming a manufacturer of factories using artificial intelligence and becoming more and more and more efficient in manufacturing factories and cars. We think it's the most efficient in the world right now.
While occasionally perhaps Cathie can come across as a bit too bullish on Tesla stock, if you look at every single analyst long term, like you go back years ago, you will see that Cathie's track record, specifically on Tesla stock, has been incredibly amazing. And generally, I agree with Cathie's points, especially how important full self-driving is going to be to Tesla. So a big shout out to Cathie for having such a good track record on Tesla stock so far. And if Cathie Wood didn't sell Tesla stock because as Tesla stock ran, it went over Cathie's 10% allocation, although there's nothing that says that Cathie has to sell Tesla stock as soon as it goes over 10%. In fact, in some of the funds, occasionally Tesla stock goes over 10% and she doesn't sell these positions immediately. She's just not able to add to these positions. For example, if Tesla stock was over 10%, she wouldn't be able to buy more Tesla stock, but she doesn't have to sell. And if she didn't sell, she would be doing so much better than minus 10% in the last 5 years. She would be somewhere closer to about 900%. I personally love Cathie, but I'm taking notes of what not to do here.
Yes, our history with China after COVID was we plowed in during COVID because we liked what China was doing from a monetary and fiscal point of view. They were not overdoing it. And then, of course, we entered the period starting in November of 20, where, managements were basically banished from their companies, and there was one restriction and regulation after another. And so we've pulled away quite significantly. Common prosperity, it seems, means very low profit margins and services that reach into tier 1, tier 2 cities. So JD Logistics and JD, we have some of that, but we have minimized our exposure until China basically seems more inviting to capital once again.
There are not many people that love Tesla stock more than me. And the only thing that I really worry about when it comes to Tesla stock is the exposure to China and what's going on between the US and China. But I think that's really just a short-term to medium-term concern, because in the long term, Tesla is diversifying, building gigafactories and all these other countries as well, and China will become less and less relevant every single year to Tesla. And even in the worst case, if something does happen, then the Chinese companies probably would not be able to sell to the Western markets, and of course Tesla would not be able to sell into the Chinese market either. But because the biggest competitors, I think, in the long term are going to come from China, maybe that wouldn't be such a bad thing. And in this video, I talk about Tesla starting to advertise. My name is Matt Postius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.